Good morning and thanks so much for tuning in. You're watching Trade Talk. My name is Alex Matthew and with me this morning is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
The first time in July that we've seen 2 consecutive days of declines for the benchmark indices, and also the first time in July at least that we're seeing selling by foreign institutional investors on consecutive days.
Absolutely. 2 sessions of consecutive selling that has come in from the FIs. And as always, when the FIs turn sellers, you have the DIIs who start dipping into the
Buying.
markets.
Yes,
and
absolutely. That's what we
they
saw yesterday.
And they have been buyers as well. So it's interesting to see how the markets are actually, totaling not to a 20,000 mark now. That's what I would like to say on this one, because clearly now everything lies in terms of what comes out of the earnings.
Yeah.
And the reason why we are seeing this kind of selling is because two major events that are lined up. One is the Fed as well as the ECB. And that's the reason why, the investors are just playing it safe.
Yeah, and in yesterday's session, you saw quite a narrow range for the benchmark Nifty 50, just about 110 points or thereabouts. At the broader markets actually saw a little bit of strength through the session, though you saw them give up a little bit towards the end. And some very big movers in trade, I must point out yesterday for the benchmark index. ITC, for example, is something we're going to speak about in just a bit. But we have given up over 300 points from that life high, right, Hiral?
Absolutely. And yesterday's session was interesting because you did see a participation that came in from the PSU banking space. So that was interesting to watch out for. If you see overall, there is profit booking that the markets have been witnessing, and we've been oscillating between that 19,660 to 19,780 kind of a range. Now, talking about the technicals, the clear support is coming in at 19,645 to a 19,700 kind of a zone for Nifty 50. And resistance has now shifted lower to 19,800 from a 20,000. So that's a 200-point shift coming in on the lower side on the resistance end. Now, any breakdown and close below levels of 19,700 can actually intensify the selling pressure in terms of Nifty 50. Now, clearly, if you see in terms of Bank Nifty as well, the call as well as the put writers are clearly battling it out at levels of around 46,000. And this is for a second consecutive row. Now, the downside support is coming in at 45,500. So if we break 45,500, there could be further selling pressure in terms of Bank Nifty, and that could take Nifty also lower. But if we are able to maintain above those 46,000 levels in terms of Bank Nifty, there could be a positive surprise coming in there. On the F&O front, if you go to see, the highest put OI is now at 19,700. And if you see in terms of the call side, it's at 19,800, which was earlier at 20,000 strikes. So there also you've seen that shift that has happened. And if you see in terms of the FIs, the FPIs have actually started liquidating their long positions in trade now. And that's clearly evident from the fresh build-up that we are seeing in the OI as well. So overall, if you go to see, there is selling pressure, though the underlying tone in the short term is telling you that there is, a sell on rise kind of a strategy. But from a longer term perspective, the bets are still bullish so far, Alex.
So underlying strength is still evident. As we were pointing out a short while back, ITC was arguably the stock of the day. And when that notice came out, Hiral, my first reaction was, wow, this is big. Because we've been talking about a potential demerger of the hotel business for quite a while. And that announcement finally came in. The stock reaction immediately after that suggested that perhaps shareholders were not too happy in the way that it's being done. Sajid is joining in to give us a little perspective on that. Morning, Sajid.
Good morning.
Is this because the company will continue to hold stake in the hotel business when the demerger takes place, 40%? What are the brokerages saying?
So if you look at the street reaction, it's clearly some disappointment coming in from the street because they were expecting a clean, direct demerger happening, but it's done in a format where ITC continues to hold 40% stake in the hotel business going forward. If you look at for brokerages saying that the ITC hotels has been having a negative free cash flow for last 5 years or 10 years. Means the average negative cash flow is to the tune of nearly 150 to 300 odd crores, and that is going to be a big challenge for the new company as well. But they're happy that some bit of capital allocation issues which were earlier there has get mitigated because of this demerger happening, and the use of ITC cigarettes cash flow, which was getting used by some of the company divisions like the hotels, will come down a bit. Also, the fact is that ITC hotels is moving away from asset-based business to asset-light business, which basically means a more management contracts for future hotel properties. They're looking at nearly 20 properties in the next 2 years, and that would mean that the requirement of capex may not be that much going forward. One concern which is coming in is that there will be supply side pressure because BAT, which holds stake in ITC, will have a significant stake in the hotel business, and that would mean that there may be a selling pressure of the shares from BAT as and when the hotel subsidiary company lists on the stock exchange. ITC is not does not have any holding company discount today, but there could be a holding company discount that emerges after this, and that's one of the issues which the street may be worried about as well.
Right. So I think another, more factors will emerge in the next meeting that they have on the 14th of August. And that's what we need to wait and watch. Thank you, Sajid, for getting us the details. And very interesting, when you have a Morgan Stanley who has an overweight rating on the counter, they have a target price of around 474. Apart from that, you have an ITC, which has maintained a buy. And
ITC?
Nomura, and they have maintained a buy, and they have a target price of 485 on the counter. MK has a target price of 525 on ITC. And Jeffries has a buy rating with a target price of 530. So a lot of brokerages who have started now looking at it to understand what the demerger would look like from here on. It's an interesting story that one should be playing about.
Cut yesterday, right? So over 4%. Perhaps
and
some
the
of them
stock has also actually run up quite a lot,
bit,
Alex,
yeah.
right? So probably this was something which was in the making. Markets have already priced it in, and that's something we should be looking out for. Let's see how the stock reacts in trade today, because that will give you some bit of an indication. So ITC is going to be one that we will be watching out for. But moving on from the metal pack, you have a Tata Steel that reported numbers in yesterday's session. Overall, yes, there has been a downtick, but the numbers have been above what the street was estimating. Rishi is standing by to get us more details. Rishi, good morning.
Good morning.
How has the company performed?
So, firstly, the revenues, they were down by 6%, and it was at around 59,000 odd crores. Then the net profit was down 92%, and it was at 600 odd crores. Now, the Bloomberg estimates for net profits were actually a loss of about 122 crores. So it is still a positive, we may say. Now, there are two primary reasons because of which the net profit has declined, and both of this are more or less related to Tata Steel Europe's performance. So that is one segment that has weighed down on the overall performance. The first reason is for there was a higher inventory cost, which increased by 9,500 crore year on year. Now, there are two reasons for this. One is because there was a higher cost of raw materials in the inventory that was consumed. This was because in the first 3 months of 2023, the costs were quite higher, and because of an inventory lag that has come into play right now. The second reason would also be a higher level of inventory drawdown in Tata Steel Europe. This is because one of the blast furnaces in Netherlands were undergoing a planned relining in the first quarter, so because of which the production was also down. Now, the second reason is because of a non-cash deferred tax charge that came in from the British Steel Pension Scheme. Now, Tata Steel is the primary sponsor for this scheme, and now it has also completely insured for this scheme. So that is also a positive, or the other side of that tax charge that came in. Now, if you come to India, basically that it offered some kind of a respite, if we say. So the revenue was up by only 1%, but the volumes were up by 18%. And even at a consolidated level, the sales volume were up by 8%. And I think the volumes are the reason that have actually beat the analyst estimate. It has also provided some support to their top line.
And quite a substantial beat at that, right? If you're talking about the difference is about 800 crores from a consensus estimate of a loss of 200 odd crores to a PAT of over 600. Thanks so much, Rishi, for that perspective. So Tata Steel, certainly a stock that you want to watch out for and trade on account of earnings and the reaction to that. There are several other companies that have posted their results, and we've got Himansh joining in with a summation of all of that. Morning, Himansh.
Right. Good morning,
what are you
Alex.
picking up?
Yes, so from the earnings with the financial services and the energy pack, we have IIFL Securities that the capital market player reported a standalone profit about 69 crores. which was up 73% over the past year. Their multi-pronged business, which is into, it showed varied performance across its segments, with brokerage revenues up 22%, financial products segment, which includes mutual funds, bonds, and insurance products, showing double-digit growth for each of these categories. And notably, though, this quarter has been extremely well for the investment banking arm, where they completed 9 deals with some names such as, pre-IPO and IPO for Idea Forge Technology, Avalon Technologies, Mankind Pharma, and Nexus Select Trust. Then we have SPANDANA SPHOORTY Financials, which reported a profit of 119 crores against a loss of 220 crores a year back. This was led by the net interest income doubling, and there was a significant improvement in the gross NPA, which at one point in financial year 22 stood at 18.7%. The customer acquisition-led growth was a key driver here, with 144% growth year on year, of which the majority of the client additions, or roughly about a quarter, came in from the 7 key states, which were including Rajasthan, UP, and Bihar. Then we have Jammu and Kashmir Bank. The bank saw its net profit almost double again, which the management commentary attributed to the top line and strong operating performance. The top line growth looks to be in line with annual guidance, and the net interest margin stands at 4%. There's also a consistent reduction in gross NPA, which reflects the improving asset quality, and it's come down 27 bips on a sequential basis. They are also aiming for an improved NPA coverage ratio of around 90%. It currently stands at 87.55%. And lastly, we have Chennai Petroleum Corporation. The results indicated a rough patch for the company, with revenues down 34% year on year, and the net profit was down 76% year on year. So these are a few earnings from these financial services and energy pack, and let's see how the stock reacts in trade today.
Thanks, Himansh, for getting us the details. JNK as well as Chennai Petro, these will be 2 out of your list that we should be watching out for pretty closely. But apart from this, a lot of other sectoral, mid-cap and small-cap companies have reported numbers. Alex, you have the names like a JK Paper, DCM, SHRIRAM, Relaxo. We will have Varsha, who will be joining by to get us more details on the same. Varsha, good morning. In terms of the earnings that you're covering, which are the ones that stand out?
Good morning, guys. So the first that we have is DCM SHRIRAM. So the revenues were down 1.16% at rupees 2,937 crore, and EBITDA was down 61.92%, while the margins were at 5.65%, and the net profit was down 77%. Now, the chemicals and vinyl business are the drag down for this business. Now, we all know what's happening with the chemical business. There's this headwinds going on in the chemical business. So this was the drag down for this company, and company is doing various, projects to combat this chemical headwinds. The next company that we have is JK Paper. So the revenues were up 10.77% at rupees 1,584 crore, while EBITDA was up 12.76% at 477 crore. EBITDA margins were at 30%, and net profit was up 18%. Now, the results have improved due to their acquisition of conjugation business during last year and better performance by Sirpur paper mills with increased volume and higher sales realizations, while the packaging board business witnessed a drop in volumes and sales realization and was impacted by higher pulp carrying cost. The next company that we have is Shoppers Stop. Revenues were up 4.76% at 993 crore, while EBITDA was up 5.42%. EBITDA margins were at 17.24%, and net profit was down 77%. Now, the drag in net profit was due to the higher depreciation that Shoppers Stop has done. While the retail sector is moving towards normalcy due to beauty and non-apparel products, but the apparel segment is witnessing, moderation, and the operating environment seems challenging. However, company is continuing to revamp older stores to upgrade their look and feel. The next company that we have is Relaxo Footwear. So the revenues were up 11% at 739 crore, while EBITDA was up 25% and margins were 14.6%. Net profit was up 46%. Now, Relaxo is actually entering into premium products where we have the likes of Metro Brands and, Mirza International, then you have Campus and all. Now, there's this footwear war going on between these companies. So let's see how Relaxo will win, because Relaxo has already won when it comes to mass segments. So let's see how it performs well in premium segments.
All right. Thanks so much, Varsha, for that update. And moving from companies that have already posted results to those that are now going to be posting results, and quite a few big names to watch out for. The first from the list that we'll be focusing on is Larsen & Toubro. And if you remember, most recently it was in the news for another attempt that will be made likely of a buyback. The first one a couple of years back that failed. Vikas is joining in to give us some perspective on the results though. Vikas, good morning. And the headline number, I think the bottom line is expected to come in at over 2,000 crore. But what are the key details to watch out for in the L&T results?
Yeah, good morning, Alex. You are right. Basically, the analysts are expecting that L&T will post a better result this time, beating analyst estimates, mostly because of strong order placements from international hydrocarbon segment. So, because oil has remained elevated at almost $75 to $80, so a lot of exploration activities will be happening. So L&T is expecting some orders from that segment also, and strong construction orders from domestic market as well. So analysts are expecting that revenues are likely to increase by 14.5% to almost 41,056 crore. EBITDA is also expected to rise by 13.7% to almost 4,490 crores. And margins are likely to be slightly or marginally lower by 9 basis points to 10.94. Profit, as you already said, is expected to be around 2,128 crore. A lot of it will also be driven by almost 10 lakh crore investment opportunities that will come up as government has planned on the infrastructure side. So a lot of hydrocarbon, roads, highways, this is likely to kind of motivate the sector as well as companies like L&T. Yeah, thank you.
Thanks, Vikas, for getting us the details. So clearly, it's the strong execution capability that is expected to aid the revenue profile as well in terms of L&T. And any commentary with regards to the buyback is going to be absolutely crucial that we should be watching out for. But moving on, the consumption pack that continues to remain in focus in today's session, because you have two names that will be reporting numbers, that is Asian Paints as well as Jubilant FOOTWEARS. Sesa joins us with more. Sesa, good morning. Let's first start with the Asian Paints. What's the key expectation? Because clearly, everyone will be watching out for the volume growth as well as the margin profile, and the company will actually set the trend for the other paint companies as well.
Right. So a combination of both volume and value growth coupled with, easing cost pressures are likely to help Asian Paints report a strong double-digit top-line growth. Now, analysts expect domestic volumes to grow at about 12 to 14% and sales growth to come at about 8 to 10%. So clearly, it is likely to be a volume-led growth. And as we have witnessed in the previous quarter as well, that the decorative paints business is likely to drive this volume-led growth. Now, moderation in commodity basket is likely to drive Asian Paints margin recovery. The prices of key raw materials used in the paints industry, such as crude and titanium dioxide, have declined further. So that is likely to aid the margins recovery. Now, what is likely to be a key point to watch out for is that the competitive intensity stays. Now, we have to, we need to watch out for Asian Paints commentary on their tactics to maintain the edge with the entry of new players in the markets, the price corrections and the margin trajectory in the ensuing quarters, and also the urban versus rural demand trends. And we need to also watch, the impact of erratic weather patterns as well from the Asian Paints earnings that is scheduled today post the market hours.
All right. So that's the view on Asian Paints. We've also got Jubilant FOOTWEARS, and I always look at this company with a very different perspective. I don't look at the earnings, but then that's what we're here to talk about this morning. What can you tell us about what is expected in the first quarter, Sesa?
Right, Alex. So, the demand across discretionary categories is likely to remain uneven, with sectors like QSR still reeling under pressure, while that of paints, as we just discussed, they are, they would buck the trend. Now, analysts expect Jubilant's revenue growth to be muted at about 6% year on year, and margins are likely to contract at 21% versus 25% last year. Reflecting yet another challenging quarter on the back of higher inflation in milk, wheat, cheese, and chicken, as well as consumers also migrating to value offerings. Now, the company's EBITDA is projected to decline by nearly 8%, resulting in a 30% decrease in net profits compared to the previous year. So similar to the previous quarter, the pizza operator is likely to see a moderation in average revenue per store, given that they have aggressively expanded their stores in an environment of, in a muted demand kind of environment, as well as the macro inflationary scenario. So the same store sales growth is also projected to be in the negative, while the company is expected to see a 15% growth in the store count. Now, if we recall in the previous earnings, we have seen that the management of Jubilant has highlighted that IPL and school vacations are likely to drive demand, as well as the discretionary spending, even as the discretionary spending remains uncertain. So that will be a key commentary to watch out for.
All right. Thanks so much, Cesar, for giving us that perspective. Of course, we'll touch base with you once again once the results are announced. Now, apart from those companies that we've just spoken about, you also have a couple of big names from the auto pack that we should look forward to, and Tata Motors is one of them. Of course, Jaguar Land Rover has been reporting better numbers in terms of volumes over the past few months, and that is expected to contribute to the consolidated performance as well for Tata Motors. On the other hand, you also have Bajaj Auto, which will be posting its Q1 results. And remember, this is a company that's been facing a little bit of turbulence in its export segment, and that as a percentage of the whole has been quite elevated. In fact, in past years, you've seen it go as high as 50% of volumes, and that is a significant margin contributor as well. So that's one to look forward to in terms of the volume mix that they achieve and the margin contribution therefore. We've got several other stocks that we want to talk about. The first, of course, is Reliance Industries. You saw the results not too long back, but the latest update has to do with partnering with Brookfield Infrastructure and Digital Realty. It is partnering to invest in the Indian SPVs for developing data centers in India. RIL will hold a third of the stake in each of the Indian SPVs and become an equal partner. We also have Wipro. Wipro Full Stride Cloud has partnered with Pure Storage, and the two will collaborate to drive sustainable technology in data storage and data centers. The goal is to empower customers to drive a more sustainable data center footprint. SJVN, what can you say about this counter? It's been in focus. We spoke with the management not too long back. It's won another order. This time, 5 projects allotted to the company by the Arunachal Pradesh government, totaling to about 5,097 megawatts. The development of the projects will involve an investment of more than 50,000 crore rupees, and the construction of the projects will reduce carbon emissions of around 1.1 million tons per year. The company, remember, aims to achieve 25 gigawatts of generation capacity by the end of the current decade. And finally, from my end, we've got AstraZeneca Pharma. The company has gotten a DCGI nod to import and sell dapagliflozin. I always struggle with these names. Perhaps you guys can tell me how to pronounce it better. But this is essentially for the treatment of heart failure in adults, and it's gotten an approval for those tablets here.
Absolutely, and I think the pharma pack has been in focus as well in yesterday's session. So let's see how this, makes it for an AstraZeneca. But apart from these names, a quick one in terms of Maruti. The company has announced a recall of around 87,599 vehicles, and this is on the back of a possible defect in a part of a steering tie rod, which has been suspected. Now, what's interesting to know over here is that this was, vehicles that were manufactured between July 21 to February 23. And the effective recall date is 24th of July. Now, this is one of the largest recalls being undertaken by the company in recent times, because in September 2021, they had recalled almost around 1.8 lakh units of the petrol and various other models, including Ciaz, Vitara, as well as Brezza and XL6. So let's see what this pans out to be in today's session. Apart from that one, you have a power grid that is in focus. In fact, Alex already spoke about SJVN, but yesterday's session, it was a power pack, movement that we saw in terms of power companies from NTPC, SJVN, Power Grid, and now one of their subsidiaries, has commissioned a transmission project in Rajasthan. So let's see how Power Grid performs in trade. Federal Bank also will be in focus as they've approved allocation of 23 crore equity shares to QIPs, and the issue price has been at 131.9 per share. And very lastly, Vedanta has been in the news as well. Yesterday was on the back of earnings, and now they've come out and said that the company's application under the government's modified semi-scheme for fab manufacturing is under consideration for approval. And they will also be applying for display manufacturing under the modified display scheme. Now, you will hear a lot of news coming in terms of the semiconductor space, because you have Semicon India, which is a yearly event as well, which is planned towards the end of the week. So it's going to be interesting to see whether Vedanta gets its approvals during Semicon India, whether they sign any MOUs there, etc. That's going to be interesting to watch out for, Alex.
Certainly. Now, we've spoken about a lot of stocks over the course of the last half an hour or so, but there's one more element to talk about, and this relates to the transactions that take place in the equity markets. You'll know that we've transitioned as a market to a T+1 settlement, which means that when you buy today, you get delivery of whatever you buy tomorrow, and the amount, suppose you are a seller, gets credited to you on T+1, which is the next day. Now, in a conversation yesterday with journalists, the SEBI chairperson spoke about the potential for instant settlement, which means just kind of like a UPI transaction. For example, if I'm transacting with Hiral here, it's an instant settlement. I send 100 rupees and she receives it immediately. You could be seeing the possibility of the Indian equity markets having an instant settlement as well. Say you place an order for a stock, you could get it instantly. Now, what are the benefits of that, you might wonder. The most important, of course, is the time value of money, which means that you won't have to have money that is lying dormant for a period of time while you wait for the settlement to take place. And the underlying infrastructure, as the SEBI chairperson pointed out, is quite capable, Hiral, of handling an instant settlement. And the other thing one would assume is that with that instant transaction taking place, that would encourage more transactions, and therefore volume and deepness of the market would increase.
Absolutely. I see a lot of questions need to be answered over here, in terms of how far are we from T+0?
Yeah.
And secondly, how will the liquidity get impacted as well, specifically in the cash market? Because this is more like a UPI kind of a settlement system that we are watching out for. And how does it actually impact the retail investor? So this is going to be an interesting piece that we should be watching out for from an overall market perspective. In fact, you will get to hear a lot about all of these questions that will be answered on BQ Prime throughout the course of the day, as well as the next couple of trading sessions as well. That's all that we have on this session. Thanks for watching. And that's a wrap from Alex and myself.